Good morning, and welcome to Slack Africa's February webinar. Thank you all for joining us and for taking the time to be part of today's conversation. For those who are joining Slack Africa for the very first time, Slack Africa is a specialist platform focused on training, education, and capacity building for the gaming industry. And we have a very strong focus and emphasis on regulation, compliance, governance, and risk in the gaming industry. Through our webinars, our workshops, and engagement, we aim to create a neutral and informed space where operators, regulators, advisors, vendors, suppliers, providers, and indeed all industry stakeholders can engage constructively on issues shaping the gaming sector in Africa. Now, our theme this month is a follow-up to our January webinar based on popular demand. A lot of people reached out to us and had questions about tax reforms. They wanted more clarity, felt we needed to pay more attention. Therefore, we have dedicated the February webinar to Nigeria's tax reform and the gaming industry, compliance, risk, and commercial impact. Now, as Nigeria's tax reform takes effect, I mean, the conversation has now shifted from would it be policy announcement? It is now, real, and we have operational questions. How these reforms would affect compliance, obligations, financial reporting, cash flow in your business, governance expectation, and ultimately the sustainability of your business in the gaming industry. Now, before we proceed, I'd like to just put out a brief disclaimer. This discussion that we're having today is intended to provide general guidance, industry insight, and, you know, um, practical perspective to you and your business. However, they should not be taken as professional or legal advice. Every organization's circumstance is unique and is different. And our advice is that you seek tailored advice appropriate to your specific business, to your specific structure, and your operations as well. Now, today we are pleased to be joined by an experienced panel of speakers bringing regulatory, tax, and industry perspective to today's conversation. They will help us unpack the intention behind the reforms, highlight the key risk areas, and share practical insights on navigating compliance, you know, um, to these tax reforms. We hope you find this session engaging and insightful. Please, if you have questions or comments, you can leave them in the chat. We will get to them, as we'll try our best to get to them as much as possible. So I know you cannot speak, I know you cannot clap, but you can use the reaction button to appreciate our speakers, who I will be introducing, without further ado. So you can react, you can thank them because they do this, without, they do this of their own free will. We call upon them and they're very responsive. They attend, they share their insight, their experience, their expertise with us. So first in our lineup of speakers, we have Mr. Adedoyori Adetu, who is a senior tax manager at Wise. Wise is a full financial service firm. And Mr. Oriadetu himself is an accomplished tax specialist with over 2 decades experience across audit, accounting, and taxation. He has led numerous successful tax engagements covering tax compliance, payroll management, tax advisory, and transfer pricing. Now, he is a fellow of the Institute of Chartered Accountants of Nigeria and an associate member of the Chartered Institute of Taxation of Nigeria. His experience spans diverse industries, including our own industry, the gaming, lottery industry, hospitality as well. So I'm going to introduce my other speakers as well. The lady in the midst of powerful men is also here. You know, she's a return guest from our January webinar, same as Adedoyin. Gbemisola Sarat Oduwole, widely known as Madam Compliance, is a tax and regulatory compliance expert with over 16 years experience in tax administration, audit, and regulatory policy. She has contributed to key compliance and reform initiatives, including for the gaming industry, as well as tax harmonization frameworks and withholding tax implementation across regulated sectors. As the founder of Tax Gist with Madam Compliance, Gbemisola simplifies taxation and compliance matters for businesses and individuals, promoting understanding of the rules and application to business and tax management. Gbemisola is a frequent speaker on tax reform, SME compliance, and regulatory governance. Her mandate is to make compliance less intimidating and more achievable. Please join me in welcoming Gbemisola today. And again, our third speaker, first timer on the Select Africa platform, we have Dr. Oni Mobolaji Johnson, who is a distinguished chartered accountant, forensic expert, and tax consultant with nearly 3 decades of professional experience spanning academia, corporate advisory, and public service. He is the principal partner of Onimobolaji Johnson and Co., a leading accounting and consulting firm, and serves as a peer review partner at Dennis Associates UK. He has advised various international organizations on complex tax and financial compliance matters in Nigeria. His expertise includes taxation, forensic accounting, anti-money laundering compliance, and regulatory advisory. Mr. Dr. Mobolaji Johnson has also served on Nigeria's National Advisory Council with focus on anti-money laundering, and he is also a trustee of the Lottery Operators Forum. Dr. Johnson brings a rare blend of technical depth and industry insights to discussions on tax reforms, financial governance, and regulatory risk. Those are our speakers for today. And as you can see, they are each and collectively in their individual and collective capacity, renowned, experienced, and experts in the field of taxation. So without further ado, I'm going to yield the floor now to Adedoyin to make presentation. He will be making a presentation to us today. You're welcome. Please go ahead.
All right, thank you, Fadeke, and it's nice having me here. It's my pleasure, and I also want to welcome everybody to this session. So, without wasting much of our time, I will go ahead to share my screen just to bring out my slides. Please confirm you
Yes, we
can
can see your
see
screen.
my screen. Thank you. Okay. All right. So as Fadika has mentioned earlier, I know a lot of people have heard about the tax reforms, right? A lot of misconception, a lot of stories making rounds, right? A lot of people online. In fact, we have a lot of tax consultants online now. People discussing. And one of the things I appreciate is that the tax reform has created a lot of awareness about taxes in Nigeria that we've never had before. So it's quite good that we're going to look at this again this morning. So the topic in focus is the Nigeria tax reform and the gaming industry. So we know a lot has been said about the tax reform. So for this presentation, we are going to be much as possible to limit it to what happens, how it affects the gaming industry, the compliance requirements, the risk and commercial impact of the tax reform. Right. So with this on this session, we're going to be looking at the recent tax reforms affecting the gaming industry, the compliance, risk, and enforcement focus in terms of transfer pricing and related party transaction, and also audit triggers in the gaming sector and steps to strengthen compliance and manage tax risk. So those are the things we're going to be looking at this morning. All right, so let's just go ahead. So what are the things or the provisions of the Nigerian tax reform that has affected the gaming industry? We know we had four reforms, tax reforms that was signed by the president in June. We have the Nigerian Tax Act, we have the Nigerian Tax Administration Act, the Nigerian Revenue Service Act, and the Joint Revenue Service Act, right? So we are going to be looking at all those provisions across board as affects the gaming industry. One of the things I've highlighted here is the issue and the redefinition of the Nigerian company. We all know that once a company is incorporated in Nigeria, right, that company is taxable in Nigeria. But there's an interesting provision by the Nigerian Tax Act where companies need to be aware of their governance structures. Decision making is now critical, right? And the provision of the NTA is that at any point in time, if your effective management or central decision making of that company is in Nigeria, you might be termed to be a Nigerian company under the new Reforms Act, specifically under the Nigerian Tax Act. So, for example, and I've given a practical scenario here. So, for example, a UK incorporated company whose CEO and finance team operates from Lagos could not be deemed to be a Nigerian resident and taxed in Nigeria on their global income, right? So companies from this year needs to be aware of their governance structures to know where they have their board meetings and where they make critical decisions about the company. If not, they might be deemed to be resident in Nigeria because all those decisions, all those management meetings are held in Nigeria and might be taxable in Nigeria. So companies need to look at that critically. The next thing I want to also mention here is the issue of the 15% minimum effective tax rates. I know this has generated a lot of issues around with the issue on which of the acts are genuine, right? You know, in the past weeks now, the National Assembly released a certified true copy of the reform, which is going around now. And with the look of things, I think that's the one that's going to be used to implement the new tax reform. So we have this introduction of the minimum effective tax rates. So companies that are part of the multinational group, we know a lot of betting companies in Nigeria are part of the multinational groups. And if we look at their gross revenue or turnover, and it's greater than is 750 million euros or more, right? And then you will need to look at the 15% effective minimum tax rate. It means that your overall tax burden must be at least 15%, which means if you calculate your effective tax rate as a company within a multinational group or a company with an annual turnover of 50 billion, right, your effective tax rate needs to be 15%. If it's less than that, then you need to pay a top-up tax. So, for example, a Nigerian company, maybe a betting company, right, has a subsidiary in other jurisdiction, and we compute the tax payable by that foreign subsidiary and it's less than 50%, the Nigerian parent might be required to pay a top-up tax to make that minimum effective tax rate up to 15%. So even if you're a Nigerian company and do not have a foreign subsidiary, but you are part of a multinational group with the turnover of 750 million or 750 million euros or more, right? And we compute your tax, right? And the effective tax rate is not up to 15%, then you need to pay a top-up tax to make it up to 15%. There's been so many contentious issues on how it's been computed, how you arrive at your minimum effective tax rates. If I was talking maybe 3 weeks ago, right, I must have had a different scenario as I have here because in the Tax Reform Act that was going around, it's quite different from what the CTC copy is saying. Now, under the CTC copy of the Tax Reform Act, it spells out how you are going to arrive at your minimum effective tax rate. If you look at Section 57 of the Nigerian Tax Act, which says that you need to divide your cover tax paid over the net income, right? And the cover tax paid is your total income paid, inclusive of levies, that is your development levy or any other levy as applicable. You divide this by your net profit before tax, less frank investment income and unrealistic gains or losses. We know in the previous acts that were mentioned, we have the issue of your net income or your profits less depreciation and your payroll costs, right? That has totally been expunged from the certified true copy that's now being shared around. So if at any point your ETR is below this 15%, company must recompute and pay an additional tax to make that effective tax rate 15%. All right. So the other point we also want to mention is the consolidation of different levels companies have been paying. We know across various sectors, right? Even including the betting companies. We know we pay the tertiary education tax, which is 30% of accessible profits. We know we have the police trust fund levy. So all this has now been repealed. We now have the development levy of 4%, which will be on your accessible profits. However, small companies and non-resident companies are exempted from this development levy. I know a lot of betting companies have passed the threshold of the small company, which is what 100 million currently, right? So we also need to look at this change. And there was an interesting thing that happened yesterday, right? We saw an internal memo from the FRS that states that the NTA for companies' income tax purposes will be applied to the 2025 financials, right? Because an internal memo, we as a company or as a firm, we are not saying anything to our clients yet because we expect that the FIS will release a circular or a public notice, which we believe is for the wider audience. So that is still an internal memo. A lot of conversation are still going around that should it be applied on the 2025 financial statement because the NTA commencement is January 2026. Does it mean the Nigerian Revenue Service is trying to apply this retrospectively, right? So those are still the conversation going on in-house, and you are still seeking more clarification and more discussion with the NRS to know how this will work, because most people are expecting that the NTA, which we expect to company income tax, will be applied to the 2026 financials. So I think we need to watch that space and see the decision at the end of the day. So companies need to be aware that from the inception of the NTA, there are no more tertiary education tax, no more police transfer levy. Everything has now been condensed into the 4% development levy. And I've also shared a little practical scenario here on how it's going to work in practice. All right. The other thing we need to also look at is deductibility of expenses. We all know, or most of us here knows about the rent tests. That is, for any expense to be allowable for tax purposes, it needs to be only reasonably, exclusively, and necessarily incurred for that business, right? And I know in practice we've had a lot of arguments, right, with our colleagues at the Nigerian Revenue Service, especially in terms of reasonability and necessity of an expense, right? But the Nigerian Tax Act has at least has reduced the burden, right? Has reduced any argument that might be coming up within tax authority, right? So now any expense that you can that's only and exclusively incurred for the business is now allowable for tax purposes. As long as right, you have third-party documents to justify those expenses, right? And this needs to be emphasized. So I've said a lot about this. Even if you buy anything across the counter, just just let them know that they need to print, that small slip you get in your malls, in your retail supermarket. You can just maybe even use your mobile phone to snap it and keep it for record purposes, because from the commencement of the NTA, the NRS will be very, 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 very stringent in terms of third-party documents for allowability of expense. So the issue of reasonability and necessary test has now been removed as condition for allowing expenses for tax purposes. I know in practice it had a lot in terms of reasonability, where you book an item of expense in your financial statement, and the tax authority are telling you that that amount you have put there is not reasonable. So, for example, maybe this Yuletide period that have just passed, you spend a lot of money on end of year party in the companies, right? And you put it as an entertainment in your books. The tax authority will say, "Oh, how can you spend maybe 50 million as entertainment for the end of the year party? That is not reasonable. It's not this. It's not that." But once you have documents to back those expense up, it should be allowed for tax purposes, and will eventually reduce any tax disputes you might have with the tax authority. Another interesting thing that's happened with this Nigerian Tax Act, especially with the certified true copy on betting companies, is the VAT exemption on stake. You might want to take a look at this, right? So part 4 of the NTA, especially section 185 subsection 1M, now provides that there's an VAT exemption on stake. This is very, very, very important, right? So we want to, and one of the implications of this is that it will make Nigeria more attractive to betting firms due to the clarity of the VAT status. For people within the betting industry, this has caused a lot of controversy with the tax authority, right? And we're happy that this matter has now been put into rest by exempting VAT, by exempting stake from VAT, and expressly provided under the Nigerian Tax Act. But it has its own implication. So, which means for companies that you are filing your tax returns, your VAT returns in January, you need to ensure that you declare your GGR on that tax return on the on the NRS Tax portal. Once you declare your GGR, you can now exempt that GGR on that same form when you are filing. So it's very, very important now. Most companies in the past will just, okay, I don't think betting companies should pay VAT. I'll just file nil for my VAT returns. But now, since it's specifically exempted from the VAT, from the Nigerian Tax Act, you need to put your GGR as your turnover for the month, and also exempt it when you are filing your tax returns. It means you have declared your GGR and filed up the returns appropriately, right? As any other sectors that that their products or services are exempted on from VAT. So companies need to be aware of that in terms of the new model of filing VAT returns on the platform. The other implication is that input VAT on costs cannot be reclaimed, right? Because it's an exempt, right? You can also claim input VAT on expenses or services or maybe expenses incurred or what on fixed assets as provided under the NTA, right? So because the stakes has now been specifically exempted under the NTA, so we also need to take note of that. So as I've mentioned, of course, input VAT recovery. So because the stakes are now exempt, even though for other industries, they can recover their input VAT on goods and services as long as it relates to taxable supplies, right? They can claim. But for betting companies, because our taxable supplies are now exempt, right? We can't claim input VAT on that. So we need to be aware of this. So because there are a lot of penalties if you claim what is not claimable under the Nigerian Tax Administration Act. Right. So another thing that has caused a lot of issue is the mandatory VAT fiscalization and e-invoicing. I've had a lot of questions, right? That for betting companies, I don't issue invoice to bettors, except maybe you're a retail betting company that issue slips at those maybe retail shops. Right. Apart from that, most betting companies do not issue conventional invoices that we see around to customers. So what is the implication? Are they still entitled to go along with the e-invoicing policy of the NRS? And the answer I'm going to give is yes. And the reason is that if you look at the provisions of the VAT fiscalization and invoicing, right, as provided under the NTAA, it does not exempt anybody. The condition is that for large companies, if your gross turnover or GTR is more than 5 billion, you need to integrate into this NRS e-invoicing platform, right? And don't forget, or just as a matter of to educate people more, it's not only so the NRS are just enforcing companies with gross turnover of 5 billion now. At the end of the day, they are still coming for larger companies that their gross turnover is more than 100 million. So invariably, if your turnover is more than 100 million, you need to start looking at onboarding into the FRS e-invoicing policy or integration or whatever, or the MBS as the case may be. So companies need to look at that because there's no company that's specifically exempted from this. The only threshold is that once you are a large company, currently if your turnover is more than 5 billion, you need to participate in this e-invoicing. And take note, the deadline has been from November. So which means we expect companies that have passed that threshold should have been embodied into the FRS invoicing, NIS invoicing platform by November, last year November. So because we know that NRS is silent now, but I know when they come for enforcement, of course, they will follow the law strictly because they've given that information since November. So I implore all our gaming companies that are on this call to ensure that they go ahead to onboard into the e-invoicing of the NRS. All right, so we quickly also want to look at withholding tax. I know Bemisola will speak on this extensively during our session. So I just wanted to just note it again, especially the issue of withholding tax on winnings from lottery and gaming. So there are a lot of conversations within LRS and most of the state inland revenue services on how deduction of withholding tax on winnings would work, right? And it's created a lot of, in fact, disagreements, controversies, even in that meeting with the LRS, right? How is it going to work? During the conversation, the LRS were saying, oh, they're just going to charge it flat on winnings, even if the bettors make loss at the end of the day. But of course, the gaming companies rejected that immediately. So I think this has now been agreed that the returning tax will just be applied on the net winnings. So which means if you are a bettor, right, and maybe you win maybe on the 2nd of February, and maybe you didn't withdraw that money, you use that money to play another game and you make a loss. It is the net winning that will be subject to withholding taxes. And betting companies are now right. A lot of in other sessions, these other speakers on this session will speak more on this part. So we just need to know that for withholding tax on winnings, it's now going to be effective. And I think there's an agreement sort of between the gaming companies and the State Internal Revenue Service on how it's going to work. The other thing on withholding tax are that when should withholding tax be withheld? And it's when payment is made or the amount is what is set to whichever comes first. And for related parties transaction, it is at the payment dates or when the liability is recognized. So even if you have not made the payment and you've recognized the amount in your books, you need to withhold, especially betting companies that pays royalty to their parent company in terms of software licenses and the like, or branding. So you need to be aware of that. Right. So there are lots of exemptions now for withholding taxes, right? Over-the-counter transactions are now exempted. Telephone charges, internet data, airline tickets, out-of-pocket expenses are now exempt from withholding taxes. Actually, this came before the old tax reform were signed into law. And this actually started on 1st January 2025. That is withholding tax regulation of 2024. The other thing we also need to look at, right, is the issue of stamp duty. This has also generated a lot of issues with the Nigerian Revenue Service. And what we've seen in practice is that, let's say, for example, I have an agreement with my related party, maybe in the UK, right? And we sign an agreement, maybe a software license agreement. What we've seen is that in DEX audits or in DEX review and tax audits, FIs has picked those agreements and applied with stamp duty on the absolute figure on those agreements, right? In some cases, they might even, if you recognize or amortize those software licenses for maybe for 3 or 4 years, we find out that the tax authority applies stamp duty on each of those was saying for the Stamp Duty Act in 1993, he's saying is that stamp duty can only be applied once on the date of what execution. That once you've applied stamp duty on that agreement once, except you renew that agreement, there's no way you want to be paying stamp duty on that same agreement every year once you've paid it once, right? So this has generated a lot of issues with tax authority in the past, right? And we've also seen that most of the time, and the Stamp Duty Act in 1993, before this new reform, also specifically says that if any agreement is not listed on the Stamp Duty Act, the rate is a flat rate of 500 naira or 15 kobo. But we've seen in the past that the tax authority will apply their rates with respect to, there was a time they released a circular where they apply 1%, right, on those agreements, right, which we've argued so many times that this does not align with what the Stamp Duty Act was saying. But thank God, this new Stamp Duty reform has cleared the air on this. So if any, there's clear definition of dutiable instruments, applicable rates, and exemption. So if any of your agreements that you have executed is not listed on the Stamp Duty Act, right, or under the Nigerian Tax Act, then there's a flat rate on this. So we need to review all the agreements to ensure that most companies get this right to avoid any issues or disagreements with the tax authority. We also want to quickly look at the new penalties and joint audits, right? We all know that there's a new regime. Late filing penalty now is now 100 naira for the first month and 100,000 for the first month, 50,000 for each additional month. For a betting company, if you have a vendor, you have to ensure that that vendor must be registered, right? In fact, in practice recently, we've had a lot of issues here because so many vendors you are dealing with now, you have to now re-onboard them. Anybody that does not want to register, you just have to ensure that you don't deal with them because there's a penalty of 5 million if you deal with those unregistered vendors. And then once the tax authorities start going for their tax audits, dex review now, they'll be enforcing this. So we need to ensure that um, most of your vendors, all your vendors are registered for tax purposes. And you know it's very easy now to get your tax ID. Once you have your NIN or your RC number, just go to the portal, you generate your tax ID immediately. And any of those tax IDs can still be used, whether your payer ID, whether your TIN or your new tax ID can still be used across all correspondence with the NRS. Registration, right? Returns mandatory thing for all persons and entities, right? Even if you are a non-resident earning a passive income, we know that withholding tax is your final tax. But if you are earning revenue consistently in Nigeria, you need to register for tax purposes and the likes. The other thing is that any taxes, all taxes are payable in the currency of transaction. So if you are paying anybody in dollars, you need to remit that tax in dollars. If your transaction, maybe with a vendor, is in dollars or any foreign currency, if you are deducting withholding taxes, you need to pay that withholding tax in that foreign currency. So we need to take a look at that. Although we know that there will be pressure on on forex as we had before, and there will be increase in forex cash flow requirements. Those are one of the implications of this provision. Now, as I mentioned earlier, there are penalties for failure to deduct withholding taxes. If you are dealing with a vendor that is a small company, right, and did not maybe include VAT on that invoice, you need to self-account for that VAT. There are penalties for not doing this. 40% penalty for failure to deduct withholding or VAT, and 10% penalty for failure to remit deducted amount. So stronger enforcement will create significant financial risk, of course, for entities. Vendors must ensure that they are tax compliance even before onboarding them. So betting companies need to make sure of all this and ensure that they are within the provisions of the law. Right. So those are the tax reform, right? We now want to look specifically on compliance risk, right, and the focus on enforcement with respect to transfer pricing and related party transaction, especially for betting companies. And the reason why we are going to look at this is because most betting companies in Nigeria have a lot of related party transaction because most of their parent companies are non-residents. So, and we know that most of these platforms are not built in Nigeria, right? Currently, most of our capacity are not enough to have all these betting platforms we use in Nigeria. So we find out that there's a lot of collaboration between non-residents, which are parent companies, to Nigerian betting companies. So the issue of transfer pricing is very, very, very key. And I must tell you, currently, the Nigerian Revenue Service are doing a lot of transfer pricing audits. In fact, most of our clients received like 2-3 letters even as at yesterday. So a lot of transfer pricing audit is currently ongoing. So betting companies need to be aware of this. And one of the requirements for related party transaction is arm's length requirements, right? The Nigerian Tax Act explicitly requires that transaction between related parties conducted at arm's length, right? And properly reported in the prescribed form. Currently, you can file your transfer pricing returns under the NRS Tax Promas platform, right? So if you have not filed transfer pricing returns before, you can go and meet them. They are located at the International Tax Department for Lagos in Ikoyi, where you can inject TP returns in your tax Promas platform and you can file. So currently, I don't think the the module for late returns penalty is on the tax performance platform for TP purposes, right? So you might need to do that before the NRS start coming for a tax audit. So if not, the tax authority has the power to adjust taxable profit to reflect arm's length pricing. So I'm going to give you an example. So let's say, for example, you have a parent company that is supplying the Nigerian betting company the platform or the software used for betting, right? And of course, because we are licensing it from our parent company, we need to pay some license fees over to that parent company. So the price at which you the license fee you must ensure that the license fee, if you compare that license fee you pay to your parent company, if you compare it with independent companies that are not related, the prices are similar. And that is where benchmarking comes in, right? So you have to benchmark the price at which you are paying the license fee to your parent company aligns with what independent companies will actually pay. And once you do this, if it's similar, you have no issues. So for gaming operators, this risk can arise where group entities, parent company, or offshore affiliates charge fees or transfer intellectual properties, e.g., a gaming software, into Nigeria. Pricing that deviates from market-based compensation may be recharacterized or disallowed by the tax authority, right? You know, you are going to amortize those license fee across the number of years you're going to use that license. So if the pricing is not at arm's length, the tax authorities can disallow that license fee you've recognized in your books. So you need to ensure. So the onus is on gaming companies to demonstrate that the transfer pricing outcomes are commercially justified. Just to avoid the issue of um, shifting profits across different jurisdictions, which is one of the reasons why the transfer pricing regulation and the Nigerian Tax Act comes into play. Right. So betting companies need to also ensure that there's sufficient transfer pricing documentation. Your transfer pricing documentation must include benchmarking, must include economic analysis. What are involved in economic analysis? The functions of the parties, right? The risk entered into by the parties, and also you need to ensure that what are the assets, what are the assets that has been utilized by both parties. In this case, for software licenses, you are talking of what intangible assets. All those things needs to be documented, right? Because under the transfer pricing regulation, the Nigerian Revenue Service has the power to request for transfer pricing documentation from any company that has related party transactions. And you need to provide that transfer pricing documentation within 20 days. Failure to provide has an implication and penalties. Right. So for the Nigerian Revenue Service not to disallow those related party transactions, you need to ensure that you have your transfer pricing documentation on ground, right? Because if not, the NRS can impose penalties, interest, and can even trigger audits or disputes. And from experience, I know that all these software licenses are very huge. If you look at a conventional betting company audited financial statement, so you need to be ensured that NRS does not add back all these numbers. So you must have your documentation, your benchmarking done to ensure that it aligns with other companies that are not what related, right? So the tax authority can also disregard any items or that are artificial or fictitious, especially where the main purpose is to reduce tax payable or lacks commercial substance. So transaction between connected person not at arm's length may also be treated as what as artificial and will be disallowed. Right. So companies need to ensure that and the reason why the Nigerian Revenue Service ensures that all this does not happen is to ensure that there's no shift of profit from Nigeria offshore, right, through intergroup fees, artificial licenses, or cost sharing without real economic value. contractual arrangements that lack substantive business purpose. So those are the reasons why the Nigeria Revenue Service are interested in the CP and related per transaction by betting companies. So what are the audit triggers in the gaming sector, right? And what are the steps in which betting companies can strengthen compliance and manage tax risk, right? One of the things we've seen that can serve as a common trigger is misreporting revenue and gross gaming revenue. Inaccurate reporting of total bets, stakes, and payouts, especially GR, can trigger tax authority scrutiny because gaming taxes or dues or levies paid by gaming companies often rely on these figures. Inconsistent or incorrect tax filing. We used to say in practice that the cost of compliance is cheaper than the cost of non-compliance. So late filing, willful default on company's income tax, withholding taxes, or VAT, right, can also trigger tax audits within the sector. So companies is to ensure that as much as possible, they file their returns as and when due to avoid unnecessarily focus on the company by the Nigerian Revenue Services. Poor documentations and record keeping. We need to ensure that our records are kept, especially third-party invoices. If there's an agreement within related parties, that agreement must be signed and must be readily available when the Nigerian Revenue Service asks for it, right? Banking records, contracts, and evidence supporting tax positions needs to be available to avoid audit triggers by the Nigerian Revenue Service. So what are the practical priorities for gaming operators within the next 6 or 12 months? You need to strengthen tax governance and documentation. You need to formalize policies and procedures for all tax filings, withholding tax, VAT filing as deemed applicable. Document rationale for tax position, especially transfer pricing and cross-border payments, needs to be available. Your agreement, your evidence of payment of taxes, everything needs to be available. Betting companies will also need to invest in internal audits and self-worth assessments. You need to conduct internal audits, at least maybe biannually, that mirror key tax and regulatory requirements. Just like you are preparing yourself before the actual audit comes. Self-testing should include the constellation of gaming revenue, player transaction, tax remittances, and expense classification to ensure that you are within the provisions of the law. You also need to revisit group structures and transfer pricing policies, right? You need to ensure that you have your transfer pricing policies in place to ensure that intercompany pricing is at arm's length and backed by documentation. You also need to reassess whether current corporate tax structures have economic substance in their claimed jurisdictions. So all these things need to be put in place as we go into the new tax regime. You also need to ensure that you modernize your record keeping and financial system. Implement automated accounting and tax system that log in transactions in real time. The other thing you need to ensure is that you should train and align cross-functional teams. Run regular training for finance because a lot is happening. You need to regularly train and retrain the finance members of your team, right? You need to document training per employee because most of the time, regulators and auditors often check records of training as an indicator of institutional compliance, right? So all these things must be also be put in place. Maintain transparent and regulator communication. As I said earlier, there are some conversation between the tax authority and the members of the betting community. This communication are very key to understand each other. So if you discover that there's a tax compliance gap, you can notify the regulators early with remediation plans, right? Rather than waiting for discovery during an audit. So if you know their tax compliance gap, you can quickly correct them. If you know that there are some, for example, your TP returns, you've not been filing transfer pricing returns, and you know that you need to file, you can meet the tax authority to inject that into your on your tax owners platform so you can file before any tax audits, right? So quick and transparent responses can lower penalties and avoid escalated enforcement by the Nigerian Revenue services. Thank you very much for this opportunity. I'll just await
Thank you.
questions, and
Yes.
I'll try and do justice to it. Thank you very much once again.
Thank you. Thank you. Thank you so much for a very, detailed presentation. I am sure without doubt that all our participants find this very useful and they have a lot to take away from it. Now we have spent, our time is fast spent, but all the same, we will be calling upon Gbemisola to make her presentation. Moyi, if you can project for us so she can take us through. Gbemi, if you don't mind, I know that you've got an extensive presentation, but if you don't mind, if we can do this very quickly in 20 minutes so we can allow for questions and still stay as much as possible within allocated time. Gbemi, are you here? Are you ready?
Yes, yes, can you hear me?
Yes, we can hear you. Yes, we
Okay,
can.
okay. Good morning,
Thank
everyone. I
you.
will try as much as possible to be brief. I know time is well fast spent, but this section will focus on the new tax reform as it pertains to withholding tax and the payroll risk. The emphasis is no longer on the intent of, but the outcome remittance are now aggressively pursued. The goal of this session is to help operators understand what has changed. Moyi, can you change the slide so I can what exposure and how to respond proactively. Hmm, My slide is okay. I will go to the Nigerian tax reform and its direction. That's a page 3. No, can't change it there. Um, the discussion will focus on workers' classification and the payroll risk, practical application of the withholding tax law, document and compliance expectations, the growing complexity of managing payroll across multiple states. Can we move on the Nigerian tax reform direction? Um, recent reforms signal a shift from persuasion-based compliance to enforcement. Now, the tax authority are going to be enforcing. You know, the new reforms give the tax authority more powers to enforce now than what it is before. The tax the authorities are now focused on revenue leakage, especially on payroll and agency agreement. As you will see from, as I'm discussing, you will see that there would be now, but let me get to the discussion so that I don't preempt myself. There will be, it has significantly reduced tolerance practice designed to abrogate payee and withholding tax rule. Data sharing, the agencies now share the, not even agents, the LRS, I said the LRS, the state IRS and other agencies among themselves share revenue so that once you do a transaction, maybe at let's say the Lagos State Gaming Authority, the Lagos State Internal Revenue will be seeing the transaction because the law now empowers them to share data across agents, and any mismatch can trigger audit at any time. Can you move on? Trying to move to the next. Can we, okay, the key reforms now, the key reforms and the regulatory updates. The reform strengthens personal income tax enforcement, widening withholding tax net, and empowers tax authority to rely on third party. I think I've did not to rely on third party data, bank records, payment platform, and transaction log. Now there will be, I think recently there was this publication that came out from Lagos State on appointment of third party as agent of collection. And there was a lot of uproar about it that now they said they will not have access to our bank account, but now our bank account is at risk. I think the Lagos State came out to put more information on that. If you are compliant, there is no need for anybody to appoint a third party. The fact is that it is now in force. So operators must reassess their existing structures. That means your structures must be, I think Mr. Riadetu said that earlier, your structures must always be, you should do self-assessment for yourself constantly so that you will not run foul of the law. Move on. So I will talk about the payee and withholding tax, payee versus withholding tax. So I will say employees are subject to withholding tax, as we know, under the graduated income between the 15% and 25%, depending on other reliefs that are available to you. And there is zero tax on 800,000 income annually and below. There is an independent agents are subject to withholding tax at a fixed rate, depending on whether it is contract, which is 2%, I think, to 5% and 10%. I think the highest is 15%, depending on which transaction is being done. But fixed monthly income and lack of business risk blurs the distinction. What I will be discussing here is that in some cases, we'll say somebody is an agent, but in this new tax reform, you have to be specific who an agent is. And your contract, the contract you are giving the agent may not even apply there. If the agent is using all your facilities, maybe in some cases they are in your company, and in some companies too use a third party company to engage staff for them. In those cases, you have to ensure that those third party companies are paying the payee of these staff that are working in your office. Once they are in your office, you can call them your contract staff, but the fact that they are there you can still be held liable if those third-party companies are not remitting their payee, because they will be termed as their own staff, not the third-party staff. Under this reform, these practices, okay, I've said that if payment arises from employment, it is taxable irrespective of whether you label it, whatever you label it. That, like I said, you can say you have an agent, it's not your staff. But once they use your equipment, they are your staff, they get monthly, what do I call it, monthly benefit. You pay them the way you pay your staff. The tax authority may tell you that how would I put it now, that they are your staff and they are not, you are supposed to be deducting pay. So your arrangement every company should look at their internal arrangement now and ensure that whoever is a staff is a staff, whoever is an agent should be an agent and nothing more. Also, I will talk about the benefit in kind. Over the years, we have said that some of us have official vehicles. There is a housing, unity club membership, and all these things. You say the benefit in kind attached to is Paku site of office. We call it Paku site of office, that I'm holding this office. All these things now are taxable at a particular percentage. It is an income. It should be factored into the income of that particular employee that is enjoying that benefit. Not we can't say now that you have an official car. It will be taxable. I think it's about like 5% of the market value will be brought back as your income. If I'm right now, the reform emphasizes monetization. If a benefit has measured economic value, it should be subject to pay. Failure to cross up this benefit correctly create significant exposure. That means you have to cross back those benefits into the salary of your employee now. Don't say we are giving her a car, we gave him a house, we are paying club membership. All those things are taxable and it will be deemed as an income to that employee. We also have there are some other benefits in kind. Mm, Bonuses. If you have bonuses, in some cases you pay bonuses and we say it's not taxable. I think we've been doing that. Now, whether it is bonuses, incentive, retention payments, and all the rest, they are still taxable if you're an employee. Deferred taxing and paying bonuses informally is no longer sustainable. Under the reform, the misstrike between your payroll and the bank record. If the payroll is paying you only your salary and your bank record is showing that there are some allowances too, even from the bank record of the company, showing that the staffs are receiving allowances too, is a red flag, and audit it can trigger audit. So we have to, like I said, our internal arrangement should be scrutinized at this point so that we don't run foul of the law. I'm trying to. Moyi is not changing my slides. I don't know, but I'll continue. And sometimes too we have performance bonuses and the rest. We say we are paying performance bonuses. These are things that should be taxed, and it should be in the workers, the employee salary. I will now move on to withholding tax on win. I think Mr. Oreadeto has spoken on it, but I just want to, because of time, I will just say it is 5%, and a lot of confusion and a lot of back and forth between the tax authority and the license operators at the last meeting. And for now, I think we're going to, the tax authority has agreed to go with the JTB guideline. And I think the JTB guideline will be what we guide them now. And the gross income, it will be the withholding tax will be the gross income, deductible stake, and the losses. Now you can remove your loss for the month before the withholding tax is applicable. I think operators should advise to do a digital mapping, resident mapping of their pointers now, because for state you should know that by now state will be coming and be bringing big figures and say our withholding tax for this month is 50 million. But maybe you have a withholding tax of, let's just assume that you have a 50 million withholding tax as but you will realize that all this payment is not for one state. Maybe the whole 50 million, maybe 30 from it, 50% from Lagos State and every other state. Operators should do a digital mapping now so that they will know the state where their players are coming from, so that they can remit the withholding tax to those states. Agents, I will go to the Agents Commission. We've talked about how we I think I've talked about the classification of agents. Some people we call agents may actually not be agents. If we have agent and the agent we are still the one buying papers for them, buying generator fuel and all the rest, that agent may not be classified as agent in whichever, when the tax authority comes. So we should have a very clear mapping of who our agent is. We can't mix our agent with the employee, so that it will not be a payroll risk for us. Commission to be paid to sales agent, field staff, and referral subject to withholding tax. However, when the agents operate exclusively for one principal, I think, or are economically dependent on the operator, payee risk resurfaces. Like we have discussed that. Reforms have now narrowed the safe zone of treating agents as independent contractors. You can see, like I think we have said that, I don't want to influencers and affiliate promoters. We use in the sector, we use a lot of influencers to promote our businesses. And we sometimes we give them revenue sharing, campaign bonuses, and other incentives. All these things should be taxed now. be
Hello,
subject to tax.
Okay, she's back.
Can
Go
you hear
ahead.
me?
Yes, we can now.
Okay.
I lost you for a few
sorry,
seconds.
sorry. Okay,
Go
I
ahead.
didn't know that. I was just okay. Revenue sharing arrangement between you and your influencers and promoters are now taxable. Whether even if it is digital assets, if you are using Bitcoin to pay them, you have to convert. Like Mr. Adetu said, the Bitcoin. I think states you should pay actually in the currency of that transaction. If it's Bitcoin, 5% of whatever you are paying should go to the state or the FIRS, as the case may be. So the providers too, the third party, that is those that provide our platform and everything. And I think we should, as operators, encourage our providers to have tax identification numbers in Nigeria. We can get the tax identification numbers for them, because for withholding taxes, if you are deducting, maybe let's say, for example, 10% from their transaction, but if they don't have what do they call it now, the tax identification number, the law says the withholding tax regulation says you deduct 20%. So you should encourage them to register, and so that they will be taxed appropriately, or else they will be paying double of whatever they are paying. Since they are not in Nigeria, their withholding taxes are final taxes, and they won't be subject to further taxes after that. So, okay, I will go to the documentation expectation for gaming industry. Documentation has moved from being supportive to being determinative now. That means that your documents, I think we've emphasized, we can't overemphasize on it. Documentation is important. Every document, every payment, should have a trail. You should keep your document and make everything very clean and clear. Tax authority expect contract to align with reality. Tax authority should inadequate documentation often leads to estimated assessment, which is like I said, if your document is inadequate, it will make it can trigger audit. It can trigger audit at any time. So documentation, we can't oversight documentation. Typical failures include deducting taxes without remittance. So payroll schedule that do not reconcile with bank account, missing agent record, backdated contracts. That means your contract now has to be very tight. It is even, I don't know why, we should not even do backdating of our contract. Our contract should, if you don't have contracts with your agent, this is the appropriate time to start putting all your records. Let your agent have a contract with you, so that by the time the tax authority comes, they will be able to see your document. Under this reform, failure attract penalties, interest, and in some cases the directors are exposed, because if the directors are not tax compliant, if the company's records are not clear, the directors in most cases are the ones that are exposed. We have the multi-state payroll complexity process. We'll talk about the payroll. Payee is a state-based, like I said, and reform have intensified interstate revenue protection. Now, for your payroll, in some cases, I would just say in some cases, the State Internal Revenue Service are the ones that are in charge of the payroll, especially and it has to be the residents of the staff, the residents. So in these cases, there are some operators that have multi-state, their staff works in multi-state. You can be in Lagos, you have staff working in Ibadan, and their tax should be for the state and the Oyo State Internal Revenue Service. So in some, the risk attached to it is that if you pay those because your head office is in Lagos State, you cannot pay all your staff payee into Lagos State Internal Revenue Service. You have to map all your employees where they are staying, where they are residents, and pay accordingly. And there should be a network interaction between your HR and your finance. Once, in some cases, some staffs are moved and the account people will not know that they have been moved. They will not know that they have been moved. In that case, it will be an issue, because what if the staff, maybe you have moved the staff from Jigawa to Abuja, and the person gets to Abuja, needs the tax clearance, and still realize that he is still being paid in Jigawa. So the payroll issue will come up, and this staff will feel cheated. The fact is that once you pay money to a state internal revenue, to get that money back, it's always difficult. So it's better for you there should be an alignment between your HR and the finance, so that once a staff is moved from one state to the other, or an employee is engaged, the finance people know, and they will quickly map that person to the state where the person is supposed to be remitting the tax. So I'll go to the tax authority, expect clear worker categorization, states by state payroll mapping, consistent remittance, irregular tax audits. Irregular audit. So in that one, regulatory compliance is no longer sufficient. Organization must maintain strong internal governance. Like I think Mr. Yadetu said that too. We should be able to check ourselves that internally, and like maybe two times you do your internal audit, so that you have a clear accountability document. Make a policy on your internal governance. There should be a standard policy of what will guide you, and what you need to build in control into your system, to build a control, and the rest. I will end with the key takeaway here. Most payroll and withholding tax risks arise from classification. I think I've said it. Weak documentation, outdated practice. We need to update our practices, and the companies, where operators now need to formally train and retrain their staff. Training cannot be emphasized there, because a lot of changes have been in the reform. The way we do businesses before is not the same. Is not the way we are going to do it. Risk. The reform is immediate risk. The reform has bring up immediate risk, and they would want to enforce early alignment, reduce back taxes, penalty, and reputational damage. In conclusion, we must know that the new tax regime is not optional or theoretical. Compliance is no longer a burden. It should be a factor in our process. I think I've been able to rush it so that I won't take much of your time. Thank you very much.
Thank you so much. Thank you, Baby. I could tell that, you were practically speeding through the presentation. Thank you. And I am sure that all the participants they followed enough to get the key takeaways from your presentation. Thank you so much. So I'm going to be moving now to Dr. Mobolaji Johnson, as are you still here, Doctor? Are you still with us? As a trustee of the lottery. Okay, as a trustee of the Lottery Operators Forum, you have heard all that has been said, in the presentation of our tax experts, the fact that there's now clarity in terms of exemption of VAT on stake. However, there is this, underlying underlying conversation going on that VAT may apply not to stake, whilst the law has exempted stake, it may now apply to GGR. But we were told, in the presentation that, it should be reported, GGR should be reported as turnover and exempt. Again, we've been told about invoicing, that invoicing is compulsory. However, one thing that Mr. Oriadetu didn't address, is the issue of betting tickets. Do betting tickets actually qualify as invoice? Are they invoice, for the purposes of, the new tax reforms? Do they qualify are they considered invoices? Also, he talked about stamp duties, related party transactions, artificial transactions as well. Bemi also touched on withholding tax. Employees, contractors. Sometimes we have contractors. However, there is the risk that tax authorities will treat them as employees and expect that, they be paid, as such, which means that, the business then incurs pension liability and other statutory deductions, as opposed to just withholding tax that should be remitted on such persons. So, I mean, as a representative of the industry, it would be good to get your take. We have a few questions as well, in terms of the growing focus on taxing digital services. How do we see Nigerian regulators distinguishing between offshore technology vendors providing pure software infrastructure versus those effectively participating in revenue generation? So you mean software providers that are also stakeholders in the business beyond their service fee, who actually participate in the revenue generated by the business? It will be good to get your insights, your comments on all of this. Where does the industry go? Where do the operators start from? The floor is yours, please.
Thank you, Fadike. Honestly, I want to apologize because I won't be able to display my picture. I have to get somebody laptop because I'm having difficulties in
That's
joining
fine.
the conversation
That's
this
okay.
morning. Yeah,
Yes.
having said that, you have asked a lot of questions, and I've actually struggled to join to listen to the first presenter, but when I enter, I heard about transfer pricing and all of that. While the second presenter, I listened patiently to throughout all our presentation. First of all, you see, what we need to have is conversation, and it's conversation that take us to what we are. And we are still going to be having conversation with relevant tax authority and with Nigerian Revenue Service. And what they must know is that they must know the peculiarity of our industry, the peculiarity of the business that we run. Can you hear me? Hello?
Yes, clearly.
Good.
Yes, go ahead,
They
please.
must know the peculiarity of this business. Before now, you see, we are doing a lot of front and back talk about the issue of value-added tax. So many tax authority, before we have the Supreme Court judgment that nullify, and this new tax law that nullify, what does it call, National Lottery Electrical Commission Act. They believe that gaming are subject to value-added tax. They are not aware that are exempted. They are exempted. Gaming, stake are exempted from value-added tax. And we thank God because the new tax law has also restored that status back to us. Now, the conversation on the issue of invoicing. Ticketing serves as invoice in gaming sectors. And in the tax law, we have what they call vatable invoice. Now that we are exempted from VAT, I don't think we need to be doing another invoicing to give to players. Ticketing is sufficient for the purpose of VAT. The question I'll be asking second presenter, you see, it's very good to go on and off, talk this grammar, law says this, law say that. The practicability of it is very difficult. And I'm very happy because in this new tax law, the law was able to recognize the specialty business of gaming. Gaming was put as part of special business and trade because of the peculiarity. Now, if we are talking about withholding tax, Withholding tax deduction Act 2024, and as we have in the new tax law, we have to get the player's TIN number. Not only getting the player TIN number, what happened to player that doesn't have TIN number? So we have to reconfigure all our system to ensure that the player puts in their TIN number before they can do business with us. Remember, we are how to make money. That is number one. Number two, getting the player TIN's number. And now, thank God, I'm hearing for the first time, and this is what I've been campaigning for, that value that is subject to withholding tax is going to be stake, winning minus stake minus what they lose, the net is subject to withholding tax. And as far as I know, withholding tax is due when the payment has been made. There are so many stakers that has their money in the wallet. The wallet, we are still a custody of their money. They are not ready to withdraw. So now, withholding tax can be there until when they want to withdraw as well. And when you talk about the issue of paying withholding tax to the relevant tax authority, now the issue is this. When you are paying withholding tax, you need to give information about the total as you have analyzed. The winning minus stake, minus winning minus stake, minus what they lose. What they lose, then next, withholding tax will be subjected to that. And you have to make a schedule. The law says you have to make a schedule of all this and attach to the relevant tax authority. Now, what you are talking about, somebody that comes from Maduguri today, he find himself in Lagos, and he pay gaming in Lagos, who is not a resident of Lagos State. You know, you can pay game, you can pay your lottery, you can pay your bets while you are on the move. You can play on your mobile app. So the place of residence is a very difficult thing. Sorry, I'm talking about the practicality of it. So that will not just be too ambiguous on the issue of grammar and grammar and grammar and grammar. How do we determine who to pay to? Do you understand? Okay, yes, we may assume that, okay, to even get the place of residence of the player is also an issue. Thank God you rightly noted it, that a staff can move from one place to another. There need to be a conversation between them and the HR so that they know where to place at the place of residence. That also needs to be addressed. Withholding tax is a great issue. As we speak now, how many Nigerians have their tax allocation number? There have been a lot of rumor, and people have seen the shock, the wave shock that will cause to the system by people withdrawing their money from the bank and all that. So now I've addressed on the issue of withholding tax. Then we also have a conversation. You rightly mentioned we should have a definition of who are our agents. You also have a conversation that our agent is. You know that there's also a withholding tax. There's also a clamoring for withholding tax on the agent commission. How would that be practicable? Let's really straight this out. That is on the withholding tax. Now,
withholding tax on commission has taken effect already.
It has taken effect from state, right?
In since Lagos? 2025.
Very good. Now, but another issue we'll be having now is this. In some states, they have not taken effect. There are still conversation going on. You know, I'm based in Abuja, and not I do have my operation around there. Now, you see, it's a very good thing to note. And I'm very, very happy when the new law defines what is allowable expenses in gaming industry. And they have come to recognize agent commission. They have come to recognize all the taxes and levy paid to the relevant state authority. They have come to recognize all that. You see, some of us that suffer from this Supreme Court judgment, that we have been carrying out our cost of licenses, cost of license as our intangible assets. Now, the Supreme Court judgment have ruled such money, such intangible assets have to be written off from our record. And it should also form part of allowable expenses. I think it's very good for tax authority to also note that. Fadeke, I just need to, because you have so many questions, I think I've addressed the issue of value-added tax, how practicable it is. I've talked about the issue of withholding tax, how can we deduct from the player, the staker. And I've also talked about the issue of withholding tax on the agent. Thank God you said it has been, it has been on. And then you also remember too, withholding tax talk about the issue of 2 million. So I need the consultant to also clarify to us that minimum of 2 million is it should not be, withholding should not be subject to that. So I need more clarification from the consultant that talk about withholding tax to further address that, because we need this clarification in the industry. Then any other thing that I've not really talked about, because but if I should address it all, in summary, you see, this, we thank God for where we are now, where we are coming from. There's been quite of issues on what and what supposed not to be, and then now that the law begin to recognize the speciality of lottery and gaming business, and recognizing the issue of that, but there is still much to do. The practicability of withholding tax, and then the you see, even value-added tax. You see, during the conversation, people have been saying about trigger audit. Nothing. There is not. It's not necessary any action trigger audit before the federal revenue or tax audit will come for audit. They have their mind brain that there is money in the sector and they can take so much away from the sector. They come for audit by default. And when they are coming for audit,
Dr. Obalaji Johnson, you have asked a few questions. Let me take those questions back to our experts so they can address them very quickly, before we close. Thank you so much for your contribution. So I'm just going to come back to you, Adedoyin, with respect to this invoicing matter, this e-invoicing and the requirement. Are you still on the call with us?
Yes, I am, Fadike.
Okay, yes. So this e-invoicing and the requirement to integrate, have, in your opinion or from your assessment, are betting tickets considered invoice? Right? And then this move with respect to GGR being subject to VAT, I mean, if you could address those two points. We also have a question here. Can tax ID suffice for TIN for individuals? Yes, it does. NIN also suffices as a form of tax ID, for individuals. So I think that's the response to that question. So if you could just address the invoicing and the GGR being subject to VAT now, that would be great. Yes.
All right, thank you, Fadeke. Thank you, Mr. Walaji Johnson.
Yes.
We appreciate the passion. We, even as consultant that has a lot of betting companies as clients, there's always a tug of war with NRS, because we give you a slight example. One of our clients in the past mistakenly erroneously filed reverse VAT, right, under VAT returns on tax formats. I'm telling you, the audit is still ongoing as of today. Because the NI said, oh, because you filed this on this, it means this GGR needs to be VAT on this. In fact, the case is on the coordinator's office. In fact, I'm sure it's going to move to Abuja very soon. I understand all those concerns, yes, sir. So the other thing I wanted to mention is that, as Mr. Bolaji Johnson has mentioned, the practicality is what is going to create a concern. So what we are just saying on the compliance side is that the provision has not exempted any company, right? And we know that betting tickets, right, even the mode of transmitting the betting tickets, right, even for, especially if you have a retail betting store, of course, you issue that betting tickets physically to the bettors. If it's online, of course, you have the online platform that does all that. How is it practical to integrate those betting platforms with the NIRS MBS solution? Is going to create a lot of issues. In fact, how it's going to be practical, we don't even know as at now. That's why so many betting companies, even as at now, are still laid back. Most of them have not even integrated yet, because how do they want to do it? Right? That's one of the questions we are yet to answer. But we are just talking about under the perspective of what the law is saying, because the law has not exempted anybody. But the conversation that can now come if during an audit or maybe a check when NIS is doing their maybe routine checks of whether any company has been onboarded. I'm sure if you show them how impracticable is going to be for the betting platform to be integrated into the NRS NBS solution, I think when that time comes, you'll be able to convince the NRS. But that now we are talking about under the regulatory perspective that they've not asked anybody to they've not exempted any company. But if all the betting companies can just make an attempt to say, oh, we have been trying to integrate, but how is it going to work? I think if you can show a little bit of an effort that this has been done, and we are stuck in areas of how this is going to be integrated to the NRS network or platform. If we are in that stage, then even if they come for a routine check, we can tell them, and I think there will be a solution on this. We are just talking about on the compliance perspective that they've not accepted anybody, and everybody needs to be on that platform once you've passed that threshold of revenue.
Thank you. Thank you very much for that contribution. Bemi, I just have one quick question, with respect to this TIN number. I know that prior to now, the tax identification numbers were issued on a state-by-state basis. But now that there has been harmonization and everyone is going to get a unified, uniform tax identification number, if taxes are remitted, you talked about the multi-state payroll earlier. If taxes are remitted and maybe the agent or the employee is moved from one state to another, I mean, will the tax identification number not suffice to properly categorize, or it is compulsory that agents, employees must update their records when they change residency?
Thank you, Falike. When it comes to Nigerian tax authorities, especially at the state level, everybody has a target, and they are always in a race. The fact that the TIN number is a unique identification number, and if you have one thing, you should be able to use it in every other state. So it's one thing. The NIN, I think there's a 13 digit, there's a link now that if you put your NIN on it, it will give you your tax identification number, and it's so easy. But suffice to say that the tax authority knows this, but they want their money, because once your money, once money that is meant for your state comes to Lagos State, there should be an internal arrangement, because I remember that JTB has a committee that do reconciliation between the states, and
Right.
but I know that the JTB has that committee, but maybe the committee now will now be doing the work of wrong payment. But I know how tax authority works. They will want their money in
It will
real
be
time.
difficult.
So
Okay.
yes, it will be difficult. So we should have our own internal arrangement. That is why I said the HR and the finance should always work together. If that staff is changing residency, they should know when the residency change and when to make payment, when to change the
Yes.
tax authority for the taxpayer. Thank you.
Thank you. Thank you so very much, Bimi. Someone is still asking a question on this tax ID, stating that, a follow-up to the previous question, that some states are not accepting I'm assuming the new tax ID, and they want individuals to still get their state's ID, a state issued tax identification number. I guess this is because it is still early days. In time, all of the internal revenue services would have to align with the requirement of the tax law, and they would have to accept, the new tax ID that is being issued. Yes, I think we have successfully run out of time. I don't know if, does anyone have questions? Maybe we can allow one or two persons to ask questions if you raise your hand very quickly. We've run out of time practically. But you know, there was an accusation last time that you know, we didn't allow people ask their questions. Okay, Bello. Mm, okay, I see a hand up. Bello Gani. You can unmute yourself. I believe you can unmute yourself now. Yes.
Yes. Brother, good morning, Matt. Thank you for the presentation. I really appreciate the way the presentation goes on. But please, my question is on withholding tax on treasury bill and treasury the bond. I think the information was not too clear on the tax payment, because I had a customer who collected and at the end of he collected the upfront payment on interest last year. And when the maturity comes this year, it was debited for 10%. And he was saying that he had that it's a tax-free. I don't know. I think there should be a
Okay, all right. Understood. Okay, so you're asking about. Yes, you're asking about, you're talking about assets here, but we're talking about the taxes that relate to the gaming industry. So if you don't mind, you can reach out to either of our speakers. We've dropped their contact details in the chat box. You can pick it up from there and you can get proper advice. Lola, do you still have a question? You can unmute yourself now.
Thank you very much. Yeah, but my question is not specific to the gaming industry.
Okay.
But it's on tax, general question. Can I go ahead?
Yes, go ahead. We'll decide.
Okay, oh, that's good. So my question is about, I don't know what the current NCA is doing about this taxing professionals in different states. What I mean is that, assuming you're a professional, a tax professional, an accountant, a lawyer, you are based in Lagos State, you have your tax certificate, everything. Meanwhile, you pay your tax, you have your TCC and everything for your staff and whatever. You now go to your state, maybe Osun, Ogun, or what have you, to bid for a job. Those state government require you to have their own tax clearance certificates, pay for your
to do business with the state, for you to be able to do business with the state.
Them.
Okay, so, all right.
To me, which is like double taxation. I don't know what the current NCA is doing about that.
Okay, all right. Thank you very much. Gbemi, do you want to jump on this one?
Let me just say that the tax, personal income tax is based on where you reside. I quite understand what Madam is saying, and like I said, a lot of all these government agencies, especially the state internal revenue services, are all for target, and whichever way they get money is not their business. So they're always, but the fact is that if you reside in Lagos State, you should be able to present your tax clearance certificate for Lagos State in Osun State. That is how it is. That is the normal thing. But we understand that Nigeria is not a normal country. And the way we do our things here is quite different. So, but the law is that you pay your tax in your state of residence.
Where you are resident. Okay.
That is it.
Just want to provide more context to that. I think the new tax reform will address that very, very soon. I know we have a tax harmonization bill that is currently going on and being adopted by different states. I think one Osun state or most of those states adopt it. Once you pay your taxes in Lagos, of course, as Madam Gusula said, you should be able to present it to Osun and move, because if you say I should not pay to Osun, that's double taxation straight away. There's no beating about the bush about that. So it's double taxation. So it shouldn't be that way, unfortunately.
It
Thank
shouldn't
you.
be, yes. And on that note, I would like to state that Nigeria is a very normal country. It is sometimes the processes and the procedures that are not as normal, right? So as we come to the end of today's session, I want to thank our speakers. Thank you so much, for your clear, practical, and insightful contributions, and also to thank the participants who have stayed from the beginning right to the end with us, for the quality of the engagement, the quality of the questions that we have received from you. Today's conversation reinforces a very important message. Nigeria's tax reforms is no longer abstract. It is now operational, and you have to be deliberate, and make necessary changes, moves to ensure implementation and compliance. We have heard clearly the stand with respect to VAT. It does not apply to stake. And proper understanding of invoicing structure is very critical to avoid unnecessary exposure. We also heard about correctly classifying relations, whether employees, contractors, providers, or agents, for tax purposes, to avoid issues and tax-related risks, audit-related risks. Most important is the emphasis on documentation. The speakers spoke extensively about documentation, documentation, documentation. Yes, unusual processes, maybe from the tax authorities, but your documentation will speak better for you. It will make better presentation for you than you could potentially do. Like I always say to our clients, it's not easy. You cannot recall all of your transaction over 365 days. So documentation helps to make your life easier. For gaming operators, this extends to how your relationship with platform providers, technology vendors, agents, and all other third parties are structured. If you need to review, please go ahead and review. Reach out to your finance experts, your auditors, have the conversations you need to have. I mean, on a broader level, I know that the associations, the Lottery Operators Forum, the Association of Nigerian Bookmakers, the casino operators as well, their association, have been engaging with these tax authorities. It will do you good. This battle is not one you can fight alone, especially where there are nuances that need clarification or that impact just the gaming industry. So for us, our advice to you is join that conversation, be part of those associations so that you can present your challenges to them and they can make representation on behalf of the industry. So on behalf of SLEC Africa, once again, I'd like to thank you all for joining us. We hope today's session has provided clarity, practical guidance, and a basis for further engagement. Please reflect on the issues we have discussed and seek tailored advice to suit your organization's circumstances. We look forward to continuing the conversation in our upcoming session. Please watch. I'll be on the lookout. Follow our pages so that you get updates. If you subscribe, we will definitely be sending you emails, notification about upcoming sessions. Thank you all, and I wish you all a fantastic and a wonderful day. I remain Olafadeke Akeju. I was accused of not introducing myself. I just assumed that people know who I am. Thank you. Enjoy your day, enjoy the rest of your day, and have a fantastic weekend. Until we come your way again next month. Bye-bye.